Hi, Sharon.
How are you?
Good. Happy Friday.
Yeah, happy Friday to you. How are you doing?
Busy. It's like more busy.
More meetings and meetings and meetings.
I know. We had a good site visit yesterday on energy.
Yeah, I like that. You know, all that collaborative work. Let's see. Let me get myself. Okay. Now I can see you and you can see me.
Definitely. Good thing.
So Caroline's going to be a little bit late. So is Troy on?
Yeah, he is. He's right there.
I'm
Shimoto.
here. Hello.
Hey, hi. How are you?
I'm good.
Good. Want to go first and tell us about the good news on the eviction moratorium stuff?
I don't know if it's good news, but
Good
there's news.
work. Yeah. So what I thought was we'd go a little bit out of order since I think both Colin Hayashida and Caroline are going to be a little bit late. So we can talk about your eviction moratorium and what you're doing on it, some good stuff that you're doing on the mediation and, you know, what we're looking at. And then if Caroline will come in, or whoever comes in first, then we can go into to either one, Colin or Caroline, whoever comes in. Is that okay?
Sounds good.
Okay, very good. So let's see, are we about ready to roll? Yes, time for our meeting. Aloha, everyone. Oh, look at Rep. Hashem is there, and we see Senator Misalucha. Aloha.
Aloha.
And Rep Takayama's here too.
Oh, and Rep Takayama. Hi, nice to see you. I think. I see well, okay, we'll see the Capitol then. Oh, there you are. Aloha, nice to see you. So aloha, everyone, and welcome to this meeting. This is our August meeting. It's now 2 o'clock, so we will begin. This is a call to order. We will start taking a little bit out of order. Rep Troy Hashimoto is going to talk to us about what good things they planned for the eviction moratorium so that we don't get people adding to our homeless ranks and hopefully staying in their homes. So Rep Hashimoto, the floor is yours.
All right. Well, today, August 6th, is a kind of an interesting day because August 6th marks the last day of the state's eviction moratorium. And as many of you know, once the state's eviction moratorium ends, we will be moving into the Act 57 measures that the legislature passed this year, which includes quite a bit of mediation and also the ability to give more time for those who need a little bit more time to apply for rental assistance. The Act 57 only calls for those who are 4+ months behind in rent to go through this mandatory mediation before even considering going to court. Now, here is the wrinkle in this whole plan. The CDC recently announced that there is a new CDC moratorium that applies to counties that are in high or substantial transmission of COVID. And so we have determined, and the governor just sent out an official press release, but Senator Schatz has been saying for a couple of days now that we are included in this. It didn't really matter to us at the time because we had our state eviction moratorium, which is more stringent. But because tonight ends the state eviction moratorium, the CDC moratorium does impact us now. So I have this chart and I'm going to share my screen. Hopefully Charles will allow me to share my screen. And I will forward this to everyone too, because can everyone see this PDF? And I will Let me zoom in a little bit. And I will show you just a few areas of where we're at. So we're here at the governor's eviction moratorium, which ended on August 6th. And so that's done. So today's the last day for that. That was the most far-reaching moratorium in terms of like there was no nuances. Everyone could just kind of stay in their home, and you didn't have to worry about applying for anything, or you didn't have to prove anything. And so that was what expires today. Oh, let me see. I need to resume sharing this. All right. So that's the governor's eviction moratorium. Now, what we're moving into now is the CDC moratorium. And there is a lot of nuances with the CDC moratorium. So if you have any type of back rent, then you may apply for the CDC moratorium, but it's not necessarily an application, it's a self-certification for the CDC moratorium. And so there is a specific website where you need to go onto the CDC's website to look at this self-certification declaration. And there are specific areas that you have to qualify for. You must qualify for at least one of these areas. Include, you got a stimulus payment, you have to meet the income requirements, which is quite high. So most people should be able to apply. You have to make $99,000 in annual income or less than $198,000 as a joint filer. So you just need to qualify for one of all of these things. If you're on SNAP or SSI or TANF or SSDI, you qualify. But you also must be able to prove that you're unable to pay full rent or make a full housing payment because your income has gone down substantially, been laid off from work hours or wages have been cut, or facing extraordinary out-of-pocket medical expenses. So you need to qualify for at least one in the first category, and you must also qualify for that second category. So it also requires you to certify that you're making these best case efforts to make partial payments or close to full payments as possible, and you would likely become homeless because you have no other housing options. So it's quite the self-certification that you have to fill out, and there are consequences if you lie on this certification. Somebody says you don't qualify, so you fill this out, you give it to your landlord, and that's the agreement that you'll have with your landlord. And we'll see though, because the CDC moratorium, there are lawsuits happening nationally, and we can quickly move in and out of the CDC moratorium, because if we have lower COVID rates for 14 days, we automatically fall out of the CDC moratorium. So for your constituents or for people that you know of, please have them know that this is an option for them. But it's, as I said, it's not as easy as a state eviction moratorium where you just didn't have to do anything. There's a lot of nuances to this CDC moratorium if someone chooses to go through this process. Now, so that's the CDC moratorium. So just keep in mind that although the CDC moratorium is in effect, there is also Act 57. And Act 57 is what the legislature passed, and that is the process to begin the mandatory mediation. So if for some reason you don't qualify for the CDC moratorium, then you would use Act 57. Or the alternative is when the CDC moratorium expires, you will use Act 57. In addition, you also have federal rental relief to qualify for. And there's a lot of articles circulating throughout the news media that there is a lot of federal rental relief available. And that is absolutely correct. There is a lot of federal rental stimulus available. 200 in this million is available in this first round. And Hawaii as a whole must use 60% of that federal rental relief by September 30th, or else we have to give it back to the federal government. So we are really working very hard to get as much federal stimulus out to as many people before that deadline. So this funds ends at the end of the year. And then we have another second tranche of funds from the American Rescue Plan of $166 million and another $50 million in mortgage assistance that then we have to tap into, but we have until 2024 to tap into this additional federal rental relief. So our focus right now is to get this first 200 million out, or else we don't want to give any of that back to the federal government. And you have to know it's 80% AMI and below, and 80% AMI is actually quite high. So it's 70,500 for one person and 96,400 on a family of four. And this is Honolulu numbers. Now the 80% AMI will differ on each of the neighbor islands. So please keep that in mind. But if you don't qualify for federal rental relief, then you would have to go through Act 57, which would require you to go through that mediation process. And the focus is on those first 4 months for the first 30 days, and then we'll phase in the next months every 60 days. Now, here's the scenario that a lot of people have been asking. What if the CDC moratorium ends in a month? What happens to the people with 4+ month rent and behind? Well, those people will just fall into wherever they are in Act 57. So likely if you're 4+ months after a month of the CDC moratorium, at that point, your landlord has the right to then serve you with that required mediation process, no matter where you are. And I will show you on the next slide of where we are in this whole process. It kind of shows you the safeguards a little bit of where everything is in terms of with the state eviction moratorium where we were. So you had federal rental relief and the state moratorium with no criteria. And then when you have the CDC moratorium plus Act 57. So like I said, if you're outside of the CDC moratorium, you would have Act 57, and it just depends on pretty much you're looking at income, where you land on the income stream. That's where you would qualify under either CDC or Act 57. And then once the CDC moratorium ends, you will look at Act 57 solely. And this will take you until January 2020, January 6, 2022 is 1+ month back rent. So that's when you can apply. So it's a very slow phase in. So if you're 3+ months behind, it's on September 6th, 2+ months on November 6th, and then 1+ month is January 6th. It's supposed to be 2022. It's not 2021. So that was a little bit of a mistake, but at least you kind of see what are the comparisons of where the CDC moratorium is compared to Act 57. And so you should know that there are a lot of safeguards in place. So we try to make sure that we phase this. I think the CDC moratorium made it a little bit more confusing, but again, it's another option that people can use. You don't have to use it. If you rather go the Act 57 route, that also is an option instead of using the CDC moratorium and you don't want to self-certify, that is an option. And so I think all of our mediation centers are set up to be prepared to go through the mandatory mediation as called for Act 57. If you do not fall within the criteria of 4+, 3+, or 2+, and still want to do mediation, there is another track that you just contact the mediation centers and they can help you with mediation. But if you want to allow it to be used in court, you have to be sure that it meets the parameters of the timing, and also you need to fill out the appropriate paperwork for Act 57 because there's a notice that the landlord must serve to the tenant to go through the Act 57 mediation. And that form essentially kind of explains, okay, this is what we're doing. Have you applied for federal rental relief? What kind of services have you tried for? It's kind of a checklist that you need to go through as you're serving your tenant to make sure that when you go to mediation, they have all this information already and they don't have to spend time figuring out all these basics. So that was the genesis of why there was a form to serve from the landlord to the tenant under Act 57 to begin the mediation process. So not very, I think it's not the clearest. We try to break it down as best as possible. But I think the takeaway is there are a lot of options for people. And if people still have questions, I think we've been recommending that they talk with the Legal Aid Society to see what rights they have as a tenant. Call the landlord tenant hotline through DCCA. That's also an option. And make sure that they keep up what is the latest information because it has been consistently changing. But I will send this out at least so you guys can take a look. You can kind of understand for yourself. So if you have a friend or a family member who's confused about all this, I think at least we have this little document available. We had to throw this together because this just happened yesterday over the past couple of days. And I think we've been trying to adjust a lot of our marketing because a lot of the marketing was focused on what would happen once this eviction moratorium ended and Act 57 started. No one really contemplated the CDC eviction moratorium, but I think it is another tool, as I said, that can be used.
Troy, you have the CDC has a website or where you can go and certify. The federal relief funds, because I think that would also be very helpful for people to actually get federal relief. Is that done by county or how do people get to
so
that?
The federal rental relief will vary by county. And I think what I will do is my staff made these flyers for each of the counties because each county is very different on how you apply and what resources you have on each county. So I will also send that out. So you, depending on what county you want, you have a friend at or have services that you're providing to them, you have to ask them first, well, what county do you live in? And I think that they can then pull up that flyer and you'll have that step-by-step process on where you need to apply. There are some nuances for federal rental relief as well, because depending on the county, Oahu has been opening and closing their portal depending so they don't get overwhelmed. And I think that for some has been problematic because you want to be in the system, right? That's the goal. But Oahu has been closing it because they can't take enough applications because they don't want to get overwhelmed. But the neighbor islands, they've never closed their portal. It's been open this entire time. And in fact, when I was talking to a lot of the housing directors, they've been saying that they want more applications because they have money to give out. They have money to spend. They want to hit that 60% goal. And so they're trying to get assistance from entities to recruit people to apply. So I think on the neighbor islands, we're at a good place. I think Oahu needs a little bit more time to catch up. I think a good sign though for Oahu is that they indicated the last time they opened up the portal, it stayed open for quite a while. I think it stayed open for a few weeks before they had to then raise the AMI to 80% to get enough applications to then close it. I would expect that they would open it sometime soon. I think my understanding was they were going to try for a monthly reopener, but I'm not sure because they increased the AMI percentage. It might take them a little more time to get caught up, but I anticipate if not soon, very soon, they'll do a reopener on Oahu.
Very good. Thank you. Questions, anyone? Thank you for all your work and your staff work on this. Wonderful to have that whole graph there with the information.
Yeah, absolutely. And please share. We need to share because it's quite confusing.
Yeah, very good with the graph. It's very helpful. Thank you. Questions, anyone of Rep. Hashimoto? I don't see anyone.
Diane, you have something? Oh, you have to unmute if you have a question.
Diane, can you unmute yourself?
Hi, yeah.
Hi.
Hi. Rep. Hashimoto, I want to ask a question about Act 57. One of the requirements seems that they have to have applied for rental relief through the federal program. Now, we have seniors who don't qualify for the rent relief. Does the requirement to pursue mediation still apply?
So it's not a requirement to apply. It's just a question of have you applied for federal rental relief, because we want to make sure everyone knows their options before they go into mediation, because at a certain point, it doesn't even make sense for a landlord to start this mediation process if they have these resources that's still untapped. So that's all it is. It's just trying to make sure that you check the box and you had that conversation about federal resources before you move to that next step. So it's definitely not a requirement. If it's a no, then you just keep moving on. And we know that not everything is going to be solved through mediation. At a certain point, a judge is just going to have to make a call. But I think we really wanted to buy time for federal rent relief to get out. We wanted to make sure that conversations were had and that every aspect was exhausted before having to go before a judge. And we also knew that the judiciary was going to be overwhelmed because they have a whole lot of potential cases that they need to take. And so we wanted to keep that in mind. So at a certain point, we're trying to help to get back to some type of normalcy while also having a cushion for people.
Thank you.
Anyone else? Thank you. Anyone else? Okay, I think I see Caroline here. Thank you so much, Rep. Hashimoto.
Yeah, and Senator, thanks for your help on the Senate side in getting this bill passed too.
Very good. Thank you. Caroline, hi, aloha.
Hi.
Some announcements and also about Kupuna Recognition Day. Nice big ad in the paper, so thank you.
Oh, I love the ad.
There it is.
Yeah, and can everyone hear me? I'm sorry, I keep having
Yes.
this echo. Okay, thank you. Yes, it was a very nice ad. If you saw it in the Friday, July 23rd newspaper, it ran the whole length of the newspaper, and it really did look nice. Yeah, this is a PDF. I have to give a big shout out to Kathy Wyatt, who is our chair for our recognition committee. She really pulled this together for me. I just helped with some of the writing. What we wanted to do was really to honor the 15th anniversary of the Kupuna Recognition Day. Act 122 was signed into law in 2006, saying that the fourth Saturday of July is Kupuna Recognition Day. This was authored by the late Representative Melly Carroll, and it really is to recognize the significant role that Kupuna play in Hawaii's culture, history, and traditions. So what we did was we took our awardees from each county that were recognized during our Older Americans Month and honored them on this 15th anniversary. Next year, we'll have more time to really dive into the purpose of Act 122 and to really honor the intent of the act and to come up with some creative ways of recognizing those that contribute to Hawaii's cultures, histories, and traditions. So I was very pleased with the ad in the newspaper. I know it was on Saturday, the actual day, it was on the website. And also I saw a digital ad yesterday at Long's, literally walked into Long's Mililani, and right in front of me was this ad. So I was really happy to see that. And again, thank you, Kathy. I know you're on. I really appreciate all your hard work with this. Thank you.
Thank you. Very nice. Thank you, Kathy. Thank you, Caroline. Caroline, you have any other announcements from EOA or PABIA that you might want to share with the caucus?
Yes, most of you already know that today is Deborah Stonewall's last day at the Maui County Office on Aging. She will be sorely missed, but we're just happy for her next adventures. And James Mariano, he's on right now, and he is going to be the interim temporary while they search for a new county executive. We had our policy advisory board meeting today, had a great presentation by John McDermott and his long-term care ombudsman contractors in each of the counties. We'd be happy to also bring the same presentation to the Kupuna Caucus. Just let me know. That was really great. Did some updates. We had a very busy month. July, of course, was the start of our new state fiscal year. A lot of activity still around COVID. Honestly, being tired with COVID. But anyway, it was around the strategies in place for COVID. Right now, the Kupuna Vaccination Outreach Group is really, their efforts are around in-home vaccinations. So for those that cannot get out into the community, they are working very strongly with the Department of Health to and partners and providers in the community, the actual providers like Kaiser and HPH to get vaccinations out into the community. So, and the local pharmacies, they've been wonderful. We've also done a lot of outreach and education around the vaccinations through PSAs and commercials, and we've supported some of the grassroots efforts the ground level, I was able to support the public health nurses and some of their outreach efforts, as long as they collected some data on those that they reached over the age of 60. So that is a good partnership that we've embarked on. And just moving forward with our regular responsibilities as well as COVID. So yeah, that's what I have to report for now.
Does EOA get additional federal monies, whether it's through the new ARPA funds, so that you can do more intensive kinds of outreach during this period? It seems like now that we have the surge,
Right.
history, even if we're vaccinated, or is the focus all on vaccinating more people?
I'm glad you brought that up, Senator. We actually received close to $7 million of ARP funds through the Older Americans Act. Now, those funds are specific to our Older Americans Act, which is and we have subcategories within the Older Americans Act. Our Title IIIB access services, our home delivered meals, our health promotion activities, and the National Family Caregiver Support Program. So those monies have been issued. We received the award mid-April. We got the monies out to the area agencies on aging. They are working to put additional contracts, if they can, into place. We've talked about, we just had a county executives meeting. We shared some strategies on how we could utilize some of that funding. We did keep not the Title III Older Americans Act, but the Aging and Disability Resource Center vaccination funds in the amount of $158,000 to support those efforts I described earlier. But the rest of the funds are to support the area agencies on aging in the community. So we have till 2024 to expend those funds.
Oh, that's good.
Well, those are those American Recovery funds that came down.
I see some county representatives. Anybody want to report on what counties are doing with the funds that they received for under ARPA in terms of services? That would be helpful for us to know in the various counties. Anyone on? James, Mariano, let's see. Okay, aloha. Oh, James. Hi, aloha.
Aloha, hi, Senator Moiraki. I am I am the interim director at the Office on Aging on Maui, and as far as I know, we're continuing with the vaccination efforts, working in tandem with our Kanoa Senior Services, who do the Meals on Wheels and the congregate dining. So still working on those efforts to coordinate with them the programming and the dissemination of information. Because aside from vaccination, we're also addressing the social isolation issues. Yeah, so I mean, there's a part about the health part, and then there's the mental health and social well-being. So we're trying still working on efforts because here in Maui, the congregate sites started just this week, the reopening, to work in tandem with the opening of schools. And also Kanoa Senior Services, was our sister agency on the county level. They also resumed their leisure services. So, you know, be a person who's been watching the news and you guys have been seeing the numbers spiking. It's just maybe something that we have to monitor day to day. So, but the funding is still something that we're continuing to work out as far as the implementation and use of the money.
Thank you. Questions, anyone? Thank you. I see Kealoha. Hawaii.
Aloha, Senator Morimaki. Thank you. Similarly to Maui County, we've used those funds to supplement our home delivery meals. We were serving a lot of our congregate meal participants as well as adult day health participants. So that has gone quickly. So we also received some county funding, their ARP monies, which we are processing now to provide mental health services. Counseling, usually counseling, so anyone can call and any age can call our provider here on Kauai, as well as what has been really popular on Kauai is the food produce boxes where they would they'll get farmers to package some vegetables together. And then we would then have our RSVP volunteers deliver those boxes.
Mm.
So those are where our efforts are going to.
Thank you, Kealoha.
Sure.
Anybody from Big Island on?
Well, Senator Moriwaki, I know Forrest Farr is on vacation and
Oh,
poor
okay.
Derek, he's sick, but I
Derek?
can, but I don't think, is he on?
He's not on
Anyway,
either.
yeah,
Okay.
I do know that similar efforts are being done in the other two counties. I know for Hawaii County, one of the ideas is to, and there is approval from the federal government, is if we need to use some of those funds, especially to replace old equipment to ensure that the meals can stay hot. So that's one of the areas I know that Horace was looking at, and similar to, I think, what Kealoha and what James said is some of the efforts being done on Oahu also. Again, really, I think especially with now this surge, that food insecurity is going to become an issue again for some individuals, because just, possibly, I don't want to use the word fear, but I can't think of a better term, but, just the uncertainty and probably wanting to shelter more in place will probably become apparent over the next month or two.
I guess with the surge, more people are going to want to stay at home. So the food service, the delivery would be important
Right.
as well. Anyone else? Any other questions? Oh, okay. It wasn't what I was kind of stalling. We were waiting for comment, but I really wanted to get an idea of what the counties were doing as well as EOA. That was very helpful. Yeah.
I do have two more updates, and I do apologize. Oh, is Dr. Hayashida on? I'm so sorry.
Yeah, but you have continue.
I just wanted to share that we are working on developing the position for the Alzheimer's coordinator here at the Executive Office on Aging. So that's exciting. And also the last thing is we did receive in our state budget $1.5 million. That's ARP funding for senior center activities. So we did and thank you for those. I know Diane's on, I know she responded. We had some other responses too. We will be procuring for those and hopefully getting those contracts into place by the second quarter. So it's to support those activities, especially as senior centers are starting to reopen. And really, it's kind of changing the landscape because we still have to put those protocols into place for because of COVID.
So that covers all of it, because that's the costly part, right? The social distancing, putting up the mask, whatever, protect, especially seniors. Yeah, that's great. Okay, well, thank you very much, everybody. Caroline, Aloha, James. We're going to move on to Colin. I think, Colin, are you there? Colin Hayashida, our insurance commissioner.
Yes, can you hear me?
Yep. Can
Okay.
you put yourself on video? There you are.
Yeah.
Thank you for joining us.
Sorry if I'm late.
On what's happening in the insurance industry, and it impacts the elderly, but your insurance rates and anything else you might want to discuss and we might want to ask you.
Okay, sounds good. Thank you, senators and representatives and members of the public and advocates. I appreciate having the opportunity to speak to you today. My name is Insurance Commissioner Colin Hayashida, not to be confused with Dr. Cullen Hayashida, who often when I talk about long-term care, we get mixed up, but we're not the same person. So, but I thought I would talk today about long-term care insurance and if you allow me, I'm going to share my screen and see if I can work this PowerPoint. Can you see that PowerPoint?
Yes,
Okay.
very well. Thank you.
So long-term care insurance is a national problem. It is not something that's Hawaii specific. It's something that all the states and territories in the country are dealing with right now. And each year it's becoming more and more of an important issue and a hot topic for all of us. Some of the concepts that you first need to understand is that, one thing is that the primary role of an insurance regulator, which is what the insurance division is to ensure the solvency of insurance companies. And why that's one of our primary roles is because if an insurance company does not have enough money, then they cannot pay out claims. So you may have a very rich benefit, a rich contribution if you have a loss, but if that company is insolvent or in the process of going insolvent, they're not going to be able to pay your claim or pay your loss. And that's for all lines of business in insurance. Another thing to understand when you talk about long-term care insurance is that no one anticipated the interest rates to drop so low. So long-term care insurance is a fairly new product. It started around the 70s or so, when interest rates were quite high. And nobody anticipated, I think, at that time, when they developed these products, that the interest rate would be where it is today. So, today, if you can actually get, a 5% return on your investment, that's pretty good. Whereas when these products were created, they're getting a lot of times over 8% of return off of their investments. So it's a stark contrast to what was the case before and what is the case today. Another problem with long-term care insurance is that the long-term care insurers underestimated the lapse rate. And the lapse rate is really calculating into the premium how much of the policyholders would just drop their policy. So they figured that at some point, some of these policyholders would just drop their policy and not continue. That was not the case. A lot of policyholders continued to pay in. And that additionally contributed to the problems we're seeing in the rating. And I think part of that is tied to, I'm not sure if everybody understands that a lot of these old individual long-term care policies that are seeing these large increases, they're not attached to any type of life insurance product or any additional product. So what that means is that you pay into the long-term care insurance policy, but if you don't use it and you die first, you basically lose all that benefit and lose all that premium. Okay. So for instance, my grandfather didn't have long-term care insurance, but he lived to be 99. He was a couple weeks short of his 100th birthday. And the whole time he was able to walk, talk, hold a conversation do all those activities of days of living. It's just the last 2 weeks of his life, he just slowly declined and passed away of natural causes. So if he had paid into a long-term care policy at beginning at age like 60, he would have built up all this benefit, and only a fraction of it would have been used. Conversely, if you had somebody who bought a long-term care policy at age 60 and then needed long-term care at age 70, they may not have accumulated enough benefit for the amount of care that they need. So really, the two criteria that I think when you're looking to buy long-term care insurance, and whether you have it or not, is really how long a person is going to live and how they're going to die. And that's not something an insurer, an insurance agent, or a regulator can really answer. What might be good for one person may not be good for another person. And that's the complexity, I think, of long-term care insurance. And then trying to standardize that, and then standardize a way of compliance over the rates have really made it challenging over the years. So that's the kind of situation we are in today. Now, when we look at long-term care rate increase approved by states, right? These are the cumulative rate increases that were approved over time. Each one of these bars represents a state. This is a slide from a public document from the National Association of Insurance Commissioners. So I've seen the non-public document, and I can tell you that Hawaii is right around here, right at or right below the national average. Okay, so we haven't really been in a situation where we haven't provided rate increases when there's been rate need, because if the product was established 20 years ago, the cost of care at that time and the cost of care today is going to be dramatically different. At the same time, we haven't been on the opposite end of the spectrum and allowed everything that has been filed to be approved. So we're kind of right in that middle ground. And at least for now, until we can find a better solution, I think that is probably the best place to be. And like I said, all the states are looking at this issue to see what we can do to resolve this problem. So where do we go from here? Well, after seeing that slide, one of the things the National Association of Insurance Commissioners have done is to develop this idea of a multi-state review. And basically, it would comprise of a review committee of actuaries from insurance departments and insurance department staff, a select group, and they would review some of these nationwide rate filings that were submitting large rate increases across the board. The problem with that is that in order for this method to work, all the states would have to buy in. And we're not quite there yet. I think we're close, but I think there's still some states that are hesitant to go down that path for various reasons, whether it be statutory or political or whatnot. And then we have Hawaii's approach, which is slightly similar. And I have today one of my staff, Kathleen Nakasone, who is the branch chief for the rate and policy analysis section. And she can better give you a more detailed explanation of our approach to the long-term care rate filings that we see submitted here. Kathleen, are you there?
Yes, hi there. Thank you for the introduction, Colin. So let me just kind of briefly say, and to continue what Colin is talking about, which is the difference between what Hawaii does today, which is based in statute, but with
Kathleen, can you increase the volume on your mic?
Sure. Is that better?
A little bit better.
Okay. Sorry, I've had internet problems all week. Well, maybe I'll just talk louder. But at any rate, so, you know, as insurance regulators, we are required to follow the statute, which we do. It has been a challenge for a lot of the older long-term care policies, which, as Colin said, nationwide, really have been underpriced. So as all states are struggling to manage bringing the rates up to more current new business type of levels, it has been a challenge because this is a product that is for seniors, you know, many of whom may be on fixed incomes. And so the division has worked hard to try to find that balance. And so at any rate, there is a statute, and then there's extra tests that we do for extra consumer protection, if you will. So for example, the statute does allow insurance companies to take an actuarially approved increase at the time it's requested. So now the challenge with, well, and it's because we are regulating for solvency. If the insurance company cannot maintain their solvency, everybody loses. So even with this effort, even with this primary rule of ensuring solvency, we haven't had not one insurance company turn down our requests for taking the rate increase over some period of time, you know, which is why instead of say a 50% increase all at once, it may be a 15, you know, and then a smaller increase in the third year. So that is one of the things that Commissioner Hayashida has supported, that we do continue to do and insist on for our policyholders. So Colin, I can throw it back to you. Is there anything more
Yeah.
that you wanted me to say?
Yeah, the other thing we've done recently is we've been holding some of the companies to a higher loss ratio standard than is required by the statute.
This is true.
And in most cases, they agree.
This is true.
Yeah.
This is true. This is true. It is we call it a recoupment test. We are trying to make sure that the insurance companies aren't recouping losses on the backs of our, you know, our policyholders. And so that we do apply, you know, insurance companies don't like it. They don't agree with it. But what the division does have going for it is that we have been consistent So it's not like we're singling any one company out. It's been very consistent over the last several years. So we also haven't had insurance companies, push back on that too much. So that is what we are doing right now. And then Colin has asked my branch to monitor the multi-state review process to see if that's something that Hawaii should participate in. So that is an ongoing review process. It will probably be, many, many months, probably into next year before the commissioner has enough information to make that decision. Colin?
Yes, and I think that's one of the things Kathleen said is that our method seeks to stop the company from recouping past losses. So we really try our best to do that because we don't want the company to increase their rates and recoup past losses on the consumers. We just want what is actuarially sound to maintain the solvency of the company.
So is the increase in rates, are they such that that's part of the cause for the increase in your lapse rate? Or is there something else going on with the, you said unexpected lapses, then you had.
So I would say the two biggest things that have contributed to these large increases are the interest rate and the lapse rate. Additionally, what other things that have contributed to it is that people are living longer and living healthier. And that contributes to the rate increase as well.
Right. So, Senator, this is Kathleen. So, as Commissioner Hayashida said, it's actually a low lapse rate that has contributed to the increase in prices, and also a low interest rate that has contributed. So these are like inversely related.
So are the long-term care rates, the fees increasing?
Yes.
Decreasing? It's decreasing or?
Oh, no. The long-term care rates are definitely increasing.
So by how much, or is it going to be difficult then for our seniors to continue to hold these policies?
Well,
To hold the policy, but I'm just wondering, is it becoming a problem?
Well, I mean, that's a good question. I think that, it's interesting because a lot of the folks, long-term care has never been really an inexpensive product, and it is optional. So, it's really a product that maybe the type of folks that might have gone to purchase it are folks that maybe have assets to protect, and can afford the premium. So it's not a product that you would, not purchase, that you would purchase if you didn't have a lot of assets to protect, that sort of thing. So the premium, is the premium affordable? How much is it going up? These are all some kind of relative questions, right? So for example, if the premium is $1,000 a year, right? If you compare it to, say, a medical policy, which could be several $100s like a year, relatively speaking, the premium is not high, right? But if you're the one that has the $1,000 a year premium policy and you get a 30% increase, well, you would be, oh my gosh, 30%. So 300 divided by 12 months, so I think it's relative to the senior and the value that policy provides. So as an example, and this is purely a hypothetical example, but $1,000 annual premium on some of these older policies is not uncommon. You know, we've seen as low as 500, 800, and we've seen as high as several thousand annually, because it really depends on when the person purchased the policy. But the benefit of that policy, I'm going to use air quotes, the value. In other words, the amount of benefit that that policy would pay out should you end up needing a long-term care, should you end up in a long-term care facility, is often quite large, hundreds and thousands of dollars in many cases. So these kupuna were very smart in trying to secure their own future, you know, preserve assets for their families, no doubt. And so it is definitely a choice, because a lot of the ones that we talk to anyway, because we do get calls when, you know, they get an increase notice in the mail. But oftentimes the value is definitely there. You know, they may have paid in $1,000 a year over the past 20 years, which is, you know, what, like $20,000. But the value, the benefit that insurance company would pay out in the event of a long-term care need is often in the hundreds and thousands of dollars. So sometimes even if the rate goes up 30%, 50%, it is going forward, right? They're not going to charge you premium retroactively. It's going forward. We, like Colin, Commissioner Ayashida has said, we do really try to prevent recoupment. And so a lot of policyholders will make the decision themselves, you know, what works best for their families, you know, is the value still there? So it's a very good question. And I would say that the answer is, it really is a case by case decision, right? And
I see.
we do, right.
Okay, I see Senator Misalucha has her hand up.
Hi, Kathleen.
Hello.
So I'm assuming your office was the one who put together that graph, or at least you have some preliminary knowledge as far as what's happening in other states, right?
Oh, yes.
Yes.
We didn't
All
put
right.
together the graph, Commissioner, right? That's not our graph.
No, that was from the National Association
Okay.
of Insurance Commissioners.
And I guess my question is related to the graph, though, that based on, again, preliminarily, is there a state that is going through or is in the worst predicament, such that are there, and I'm looking for the consequences, that over time, what would be the worst thing that we can expect? Are they, like, you know, refusing to you know, fulfill the contract? Is it one where, and hopefully not insolvency, but what would be the impact to our kupunas?
Well, the worst impact would be in insolvency, right? And that would be, the worst case would be a state with a lot of policyholders that were affected. The company goes insolvent. It'll be up to the Guarantee Association to pay out whatever benefits that the policyholder was intended to receive or did receive. And, you know, perhaps that benefit could have been, hundreds of thousands to $1 million a daily benefit or a month. Once it goes to the Guarantee Association, you're only going to get, the Guarantee Association is only required to pay a portion of that.
So Commissioner,
yeah.
do you want me to talk a little bit about the state guarantee funds and the protection that it affords? Because I think that it's something that I think people may not know about.
Yeah, well, we have, like every state, we have a Guarantee Association fund. And that fund also, if you were a state that had a lot of policyholders that were affected, and the Guarantee Association had to pay out even on a partial basis, the guarantee fund could run out of money as well. Oh,
Oh, sorry. Do you have an idea as to what is the size, the extent of our long-term insurance portfolio here in the state?
that, Kathleen, do you have the stats on that? I thought
You know
we
what,
had it.
I don't, but if I can just try to address address the earlier concern, which is that, like, what is the worst case scenario? And so, as Commissioner had said, preventing insolvency is really the first and foremost goal of the insurance regulator. Now, Hawaii is not a state that has any long-term care insurance company domiciled in our state. So, for example, Pennsylvania is a state that historically has had long-term care insurance companies domiciled in their state. So that state's regulator would oversee any insolvency. So in the case of Penn Treaty, which was a recent insolvency that is now with the Guarantee Fund, there were about 90 Hawaii policyholders that were Penn Treaty policyholders that then became the responsibility of the Guarantee Fund that Commissioner was talking about. So right now, the Guarantee Fund, because Penn Treaty is no more, Penn Treaty was liquidated, all the state's guarantee funds received funds in proportion to the policyholders that they are now responsible for. So there aren't actually a lot of folks that are out on claim within the Guarantee Fund. So, if all the insurance companies went insolvent at once, every state would have a huge burden because the Guarantee Fund would then be very, very stressed. But, it would really only, I think, be a stress if everybody were out on claim at one time. And so the mechanism for the fund to get money to then pay the claims is one of two ways. One is it is within their, it's written in the statute that they can request a premium increase. So they would continue to almost operate in the same way that an insurance company would. And we would apply the same kind of actuarial review, which is to say that, they can't just willy-nilly increase the rates. And then secondly, there is a fee assessment mechanism by which the fund can actually assess all the carriers that are part of the fund. So who is required to be part of this guarantee fund? All life and health insurance companies, not the Kaisers and the HMSAs, but all the other insurance companies.
But so, I will say, Senator, that I have talked to the board in Hawaii, and they are concerned. I don't think they're, although, it may take something like a bunch of insolvencies at the same time, I think from their perspective, just with Penn Treaty happening, they were concerned, and they still are concerned.
So, Colin, is there anything on your website where people can see, comparison of long-term care insurance programs or policies, so that there's some kind of information of a person, the consumer, now looking at where might I get information on, is it worth it for me to get a long-term care insurance policy? And number two, when I look at the policies across the board, what should I be looking for? Is that, some kind of consumer oriented?
So we do have some information, but the problem with the policies for long-term care, it's not like comprehensive medical or auto. So in comprehensive medical, you have the prevalent plans, and all the plans kind of match up. Just like auto, you have the basic coverage that everybody needs to get. With long-term care, there's a wide spectrum of different types of policy benefits that's out there. So it's hard to match up those. So it really, oftentimes what we find is that, somebody will call us and we really have to walk them through, okay, how much did you put in? What is your inflation rate? What is your defined benefit and so forth? And then lay out those numbers and say, in your particular situation, not anybody else's, just in your particular situation, does that work for you or does that not work for you?
So,
Commissioner, there's also the, we don't have it posted, but at your NAIC website, there is an LTC, it's called a suitability guide. The NAIC produces them for annuities, life insurance, long-term care. And so it's really good. It describes, okay, what is long-term care? And I think, Senator, it would answer the questions that you would want,
And
a Kupuna to have. And I think Sage Plus SHIP, Colin, does
Yeah.
distribute that. Yeah.
yeah, and also, my understanding is that there's a worksheet that goes with that, and that's supposed to be completed with the agent at point of sale.
Right. That's for folks that are actually in the application process. Right. And as what Commissioner's describing is, it's actually a required form. It's called a personal information worksheet, and it's designed to help the applicant decide, is this right for me? Can I afford it? If premiums are expected to increase, can I afford it? So that is actually in statute. It's required in, as Commissioner.
Would you have a link to that, something like that, a simple, for a consumer
Yeah.
to look at? That would be really helpful to have, if you could either put in the chat or give it to us, and then we could share it with people, because I'm sure there's a lot.
Okay. So the buyer's guide, as well as a template of what a personal information worksheet looks like, because it is pretty much standardized. And so Commissioner has also just recently kind of given his blessing to try to expand the long-term care section on his insurance division website. And so what we hope that will do is really kind of put all of this information in one place, especially as the really across all states, because all states are struggling with this this attempt to get the rate level up to a place where insolvency is not the concern that it is.
So anyone else with questions? Senator Mitsulucha.
yeah, just my last one, because I know you want to move on to the next agenda. So Colin, I know that the solution may lie not necessarily administratively, but probably policy too, public policy wise. So to that extent, I'm sure Senator Moriwaki and myself, you have Representative Hashimoto, Representative Takayama, and Hashem on this call. We would be happy to sit down with you and dig deeper into this, because if your board is concerned, there's probably something there that really we should all be concerned about.
Yeah. And, I think part of it too is that, as Kathleen mentioned, the assessment that's done on health insurers applies to all health insurers except HMSA and Kaiser, except HMOs and mutual benefit societies. And that's a philosophical debate whether or not they should be included or not. But that assessment would probably really help the guarantee fund, but then do you want that line of business contributing to that? On one hand, you could say, well, there's other for-profit insurers that have to pay their small portion. HMSA and Kaiser and all the other mutuals, they would probably disagree.
Okay, anyone else? Well, thank you so much, Colin, Hayashida, and Kathleen Nakasone. Really appreciate your time and information.
Thank you.
It's the information, whatever information you think might be helpful to the caucus, and if there's any thoughts you have in terms of Senator Misalucha's request in terms of any policy that we might look at, please let us know. Thank you so much.
Okay, thank you.
Aloha.
Aloha.
The final item on our agenda is, as usual, finding any other topics that we would like to have. I know that, Caroline, you mentioned long-term care and the ombudsman and what he's doing or what the office is doing. Is there anything, so we can have John maybe the next time, or are there any other topics that you think we should have that's more urgent? Rick.
I think Sam Trad would like to present again on compassion and care at some point.
Okay.
There's probably other ones too, but start with that one.
Oh, we have her scheduled for later this year, Rick.
Senator,
Yes?
John is actually, he won't be available at the next, in September.
Okay.
So I'm wondering, would you want to move him to like
September.
October?
Sure, October would be fine. And then compassionate care we have for what?
I
November.
believe it's
November. So we have open September. Anyone with any topics that you might want to hear in the upcoming month? Senator Misalucha.
How about something on digital access and equity? I know I've been really trying to shepherd this issue. In fact, I'm trying to have conversations with interested parties. So if those of you who are in this thread, can you let me know if you're interested? Because I want to try to pursue that further, whether trying to get some federal funding for this. And as you know, it's not just digital, it's not just broadband, it's also access to equipment. It's also digital education, trying to get our kupunas to know how to navigate the digital age, because everything else now it's through that medium. And even post-COVID, I think it's going to be a very important skill set for them to have.
Is there anyone that you have in mind, Annette, in terms of who can present or who's doing a program?
Actually, so Caroline, has from their office, has been attending the how do you call that? The digital hui, the broadband hui with Bert Lum. So that's why I just had a conversation with Bert, and I was asking what the status of that is. And I know, Caroline, you've had somebody in your office to connect with that, but I think we need to do more.
Okay. If we can find a speaker or somebody who's actually working on something.
Yeah.
So,
Caroline?
I'm wondering, could we ask Bert?
Bert, Bert would be a good one.
I see Ian on. Ian, are you ready to talk to us about Alzheimer's? I know we're recruiting for a position, but I'm talking about the bill that passed in terms of training or training availability for first responders. Ian, are you there? I guess not. I saw his name, so I thought maybe he's there. But Alzheimer's is also, and what you're doing on that. Oh, Caroline.
My apologies. There's been conversation around the issue of workforce development. And this goes beyond just the aging network. It's the services that are provided to people with individuals with disabilities. It's broader. And I know that the governor just put out his newsletter, and there was a piece about something that he's doing with workforce development. I'm not sure if we could get someone to possibly present some of their ideas that they have around workforce development.
Yeah, sure. Working with elderly or elderly working?
No. We just want to increase workforce development because we're so, it's like
For staffing of
for providers. Yeah.
Okay. That's good. I see Ian now on. Ian, you want to unmute?
Absolutely. Hi, Senator. Sorry about that. I stepped away momentarily.
We're talking about topics for the future upcoming meetings. And we thought maybe an update on Alzheimer's, your first responders, Alzheimer's training.
Absolutely. So a few really brief topics on that. I'm in the process right now. I had hours and hours of meetings today and yesterday looking into what our goals would be for legislation coming session. And as always, some of these would be items that we request the Kupuna Caucus to take on. And take one step back on the first responders training. Following Chair Waters recognizing Alzheimer's and Brain Awareness Month in June, he's now introduced legislation on the county side encouraging the first responders who work for the county to develop their first responder training. And I think this is we don't usually engage on county level things like this as an association across the country. But I think this is a really good example of how we're seeing local leaders taking the mantle of supporting Act 155, which permitted these trainings. So I think seeing that, usually I would say if you get a permissive law, maybe give it an extra session before you reintroduce to prove that it's working. But with this kind of momentum, I think we will support a stronger turning that may to shall language. And as Caroline was just talking about, incorporating, creating incentives for workforce is something really interesting. And I was about to send off an email today to HAH because it's something which they brought up in their policy discussions.
Okay, we're gonna have to get really fast because we're 17.
Okay, all right. So that's the basic ones. Geriatric workforce and first responder training. Pardon me, sorry for taking too much time.
Sorry, we went over on the insurance section too as well, but really good conversation, really good topics. If those of you who've suggested these topics, you can send it to us in terms of the topic and who might present and what might be the content of the presentation. We can schedule them in over the next few meetings that we have and see who's available for our meeting dates. Okay, I'm going to cut us short in our conversation, but we went over time and I think good conversation. We learned a lot, especially about insurance. Thank you, Rep. Hashimoto, for all the work you've done on the eviction, preventing eviction. So any other announcements before we cut you off? And say aloha and mahalo and have a great weekend, and we will see you next month.